The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, going back here to the Diagnostic Trading Hour. The markets are roaring. We got the S&P down over 20 points right now. We have the Russell down about 19 points on the day. We got the Nasdaq down 59 points. The Dow down 200 points on the day. Copper is currently down 1.5%. Gold is pretty quiet, at least relative to settlement, up a couple points. We got silver right now. It's down almost 0.5%. Natural gas moving big, down about 2% on the day right now. Oil just up near a mere 11 cents on settlement. We'll go back. We'll look through these individually. But we got corn right now. Looking at it, it is down a few dollars, about 0.5% on corn. We got soybeans down 21 bucks, or up 21 bucks, and up about 1.5%. Euro dollar currently down 8 pips. It's again, that's not totally reflective of what's been going on, but just talking about in relation to settlement. We got Aussie Dollar is up 49. We got pound dollar up 19. We have the dollar Frankish down 7. Dollar CAD down 50. Dollar yen is currently, let's see, we got dollar yen currently down $1.15. We got Aussie yen down 50 pips. Euro yen down $1.69. Pound yen down $1.75. 175 pips. And we got the euro pound down 24 pips on the day. So that catches us up for where we're at the moment. And we had one news trade. There hadn't been really a lot of news going on this week. We really only had one major news event that was planned. Now that doesn't mean, of course, the markets can't rip and roar on things that aren't normally big moving events. But there was one event for the week, and that was really just last night's report there, where we saw the unemployment change come out over on the Aussie dollar. And so just let me see here if I can pull this up for you. And all right, let's pull up the Aussie. We'll look at it. I may even grab a simpler chart just to do a news analysis. But let me see here. We'll do a new simple chart and pull that up. But we got a nice, big, solid move out of that Aussie report when it came out last night. And, all right, so file, new chart. And then we're going to go over here. We're going to check out the Aussie. We'll throw that on there. And pull that up. Back out first, we'll just look at just basic movement, what happened. Okay. And let's see here. So we go in and look at last night. You can see where it ripped, like right there on the report, and took off. Got to move low to high. Usually don't get much of a pullback, maybe 20 pips. We pretty much got about a 20 pip pullback, and then went on back in the same direction there. But we got 59, basically 60 pips out of the trade. Often on this trade, we're looking for, like I said, a pretty good move, and that was it was a good report. So what is a good move? What are we usually looking for on that? Just doing a review with you. I know I had some traders that did do straddles on that last night. Worked out well for them. We're looking for as much as, basically 50 pips, and so we exceeded that. We got our 60. 75% of the time it breaks 50 pips, which usually it's higher than 50, but there's a few that have just been pathetically lower. And so you could have went in, you could have put on a couple straddles, and done them right here. And the movement, by the way, as you notice, and this is common, usually does happen right there, and pretty much the first 15 minutes or so. A good majority of the time you get that fast move. So it's even a trade that you can hop on, and you don't have to choose the far out expiration. The minimum you won't, because you got to see what strikes are available and what you're looking at. But I mean, you could be looking at the really the 6 to 8s, because the report comes out there. Or, there's just various times you could be looking at on the trade. So just trying to find the best report, depending on what time zone you have everything loaded in. And so this one's 8:30. I guess actually shows the 7 to 9s, or you would have chose like the 6 to 11s, or you could have chose the 8 to 10s. So you got 7 to 9, 8 to 10, or 6 to 11 p.m. You had 3 different spread choices you could take advantage of. Also, you could look at binaries. They have them every hour now on the Aussie Dollar, starting at 8 o'clock, or starting at 6 to 8, and then at 7 they have new ones, and 8 they have new ones, and 9 they have new ones. So every hour around the clock now they have new binaries on Nadex. They added the Aussie and the pound just here in the last couple weeks to be around the clock. And basically you get expirations at 7 o'clock all the way till 5 o'clock. Just about every day. That they end at 4 o'clock on Friday, and they don't. The first expiration is 8 o'clock on Sunday. But in between there, Monday, Tuesday, Wednesday, Thursday, then you're getting those around the clock there that you can take advantage of. All right, so that was our Aussie trade. And, we can look at a few things on the Aussie trade. One is, let's go in and let me add in 6A. A couple of those on here. I know we're about to roll over as well, but just add that in, and we'll make it transparent because I'm going to throw some volume stuff on here. Again, when I'm trading spot, I like, if possible, if it's at least a liquid enough, spot forex pair, I'll go in, and I want to make sure I use the volume. You may just be trading the futures, but if you're trading Nadex or if you're trading spot FX, then you'll want that there. And we'll make that 4. We're going to make that one 10. And we'll go in here, and we'll also throw on one more. We'll make this 60 minutes, okay? And we'll also make this one transparent. So that way, and the reason I'm choosing white on close is just a little bit easier. It's only one color I have to change to transparent to hide it out there. And, of course, it helps if I type it correctly. And if I can't type it correctly, then I'll just I'll choose it from the drop-down box. That's also an easy option. And then I'll click OK. Once I put all that on there, I'm then going to dive in, throw in a few things. Okay. So I want to look at my deviation levels. I want to look at the deviations. I want to go in. I want to check out the expected ranges. Okay. What kind of expected movements do I have? I also want to check out, spikes. Do we have any volume spikes that I need to be aware of? And so let me go in here real quick. And we'll set this one. We'll make this high-low. And I want to assign that to my 60 minutes because I'm actually looking at the spot forex charts. And then we'll go over here, and we're going to look at volume. Like I said, on the future side. So volume right there. Volume right there. And then after we've done all that fun stuff, I want to make sure, again, I label it and assign it to, again, the future on the 10 minutes here. Let's label that. And let's assign that to the future on the 4 minutes. So I'm using the futures volume. Huge thing. I'm using Ninja, in case you're wondering. Ninja Trader here. And now let's see what kind of picture we got. Okay, so we threw a whole lot of information on the chart. It'll take a second for it to load up because it's doing a lot of calculations all at one time. And okay, so now we got that. Now we need to make sure. One thing I did not do is I did not tell it to set. That's why it looks all squished up. Same as input series. So I can go over here and on the panel, just choose same as input on that. We'll choose same as input. And on the other expected range, I'll choose same as input. So that way I'm saving myself some space. All right. So now that I have all those pieces coming together, it gets a little overwhelming. And but we can zoom in, get a little less overwhelmed. And there we go. All right, one thing I can see is, going in. Oh, I thought I added my channels on there. There we go. We'll add that in also. Okay. The next thing is actually leading up to the news announcement. The volume's picking up. Okay? That's my clue. That's my biggest clue that I should expect it to exceed the expectation of movement that I have planned out on the Aussie dollar for that hour. That volume is exceeding. And then, of course, it obviously highly exceeds with the news announcement. And then it backs off. Notice how it backs way off. Now I know we flattened out for sure. Definitely by this time right here. And see that nothing happens for quite a while. And then things start picking back up again. I actually break out of volume a couple times again. Just barely break out of expected range. And flattens off, stay inside my range. Breaking out of volume, almost hitting it there. Well, notice that's a pretty high volume like expectation for being such a flat bar. Something's about to happen. And then boom, boom, nails it. Comes on, still comes back in. But I'm getting plenty of early warning signs over and over again that volume is going to break out and the market's going to move big. And it can really help you. Volume precedes price. Okay? And so the movers and shakers are going to start moving things before they actually do move. And notice right here, I start seeing volume pick up. It's picking up again. Backs off a little bit, but still getting high volume. Okay, this thing is not done. They're just fighting the battle out. And then right there, right on that point, right there, that's where it finally breaks down. So it's coming down. You got a warning. You got a chance. And then bust through. Nails it. Volume stays high. It's been rocking, like I said, on a lot of the different instruments lately right now. And it's moving again. High volume. What do? We bust right into that expected range. It does pull back. Aussie's pulling back quite a bit. And notice what level we went to. We went right to the one deviation level. Okay? And that was a retracement from the 2. We had pulled back down, but we are right at the one deviation level. And I can see that even clearer if I go over here. And so I'm tracking my one deviation move. And I can see, hey, it's way up there. Like we're getting just a massive, massive move, almost up to 2. But then it pulls back down, and now all of a sudden my retracement from high to low, that's why it's green, because that'd be a potential buy. All right, hitting that one deviation mark. I'm still getting that high expected volume. If I see that stuff back off at all, then I'll expect it to stay up. Right now I haven't seen it back off, so it easily continue its downward move at this moment. But we are, we are back at that one deviation. It's going to be a major support resistance level, and that's where we're sitting at on the Aussie for the evening. We basically busted through that thing last night and stayed above it. And we bounced off of it once right there. We came back up, bouncing off of it again right now. All right. We'll stay there. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. All right, so like I said, looking at it, volume starting to back off. We're right at that 1 deviation level, expecting the Aussie to sort of chill out right now. So I'm sure we're going to see that across a lot of different instruments at the moment. Let's take a little look at some of the futures. And but before I do that, I just want to hop in. I want to see what we got on the calendar coming on up. We had our retail sales this morning, 20, 30 pip mover, usually not in and of itself, just a massive mover. Can be, but not most of the time, I guess would be a good way to put it. A reminder, we do have PPI coming out tomorrow, also not a big mover. Followed up by University of Michigan Consumer Sentiment, not a big mover most of the time. Now, the reason I'm adding that most of the time disclaimer in there is I don't trade it because it doesn't move most of the time. Or if I do, I'm doing like a neutral strategy on it. But that doesn't mean that you can't have some number that comes in totally off expectations and just blow things out of the water. Okay? So I like people to be, aware of that so that way they don't just go, oh, well, it just never moves. So, things can happen. Let's see, what do we got going on? And I'm just trying to see if there's anything. You got the whole Russia thing. That's probably part of what's rocking the markets. Nothing beyond that I can really see. But let's see here. What do we got? Let me pull up. That's going to be Friday, Saturday, really nothing happening. Sunday, we're rolling into a whole lot of nothing. There will be a new motor vehicle sales report coming out of the Aussie Dollar. Not usually a big mover, but just something to be aware of if you're trading Sunday night. And looking on over, we're going to have monetary policy meeting minutes on Monday. That can have an impact. So, they haven't made a lot of changes. I doubt to see anything. I doubt we'll see any big impact out of the minutes because they haven't really released any big shocking statements lately. But we'll see. And then I'll probably be looking more at an iron condor for that trade. Tuesday we'll have manufacturing sales out of Canada. We'll have a few things. So I'll get you all caught up on Monday for next week, and we'll walk through, the different things. We are going to have like asset purchase facility votes. We're going to have FOMC statements coming out next week with the FOMC press conference. If you're a New Zealand dollar trader, GDP is going to be coming on out. We're also going to be looking on over at existing home sales, Philly Fed. That's coming out next week. Japan is going to be having a holiday next Wednesday, so be aware that can jack up the cycles a little bit. And let's see, we're going to have a core CPI, core retail sales CPI, all that's coming out of Canada next Friday. So we might have a potential dollar CAD trade there. So obviously the big event of the week is having really Wednesday when, let's see, when is that? Oh, the Japanese holiday's on Thursday. Sorry about that. So Thursday, Japan's going to be on holiday. But the big thing is going to be really the FOMC projections and statements and funds rate and press conference, because this is Yellen time. So we'll really be watching and seeing everything she says and does, and the reports and the statements and all the stuff that come out of that. And there'll be a lot of attention on this. So that'll be our big news day. We'll be looking at and that's sort of cool because it comes out right after the show's over, so we can talk about all the setups going into it. That'll be our Wednesday show. We'll be focusing mainly on the FOMC. Okay, so what do we got for today? What else can we look at? What else can we look over? And we'll pull a few things up. We got the Russell's been pushing on down. It's actually bouncing right now at the 1.5 deviations right there, so right at that level. And we also are getting volume starting to cool off. So it's been pushing hard, getting a strong move on down. I was watching all this volume breakout, and just bam. I mean, it's like it was perfect trend move. Just kept going and going and going. And so able to write a nice long trend, even got a little bit more out of it, but backing off at this moment. And we'll go over and check out a few of the other indices along with it. We'll check out the Dow. On the Dow, let's see here. We'll pull those up right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So we're still getting that higher volume. We'll see if it keeps going. So now this is one of the things that I think is a good lesson. And I think it's one of the biggest mistakes we can make as traders. And we're all guilty of doing this at some point or another. Or if you're not, you will be. Or hopefully you won't be. But it can't go any further. Wow, okay, this thing's got to bounce. It hit the deviation line. It's down 200 points. It's, whatever your philosophy on the reason why it just can't keep going, it can always go further. Okay? Is it probable that it will? Most of the time, no. But don't trade on the it can't do. Trade on the what does the chart say? Right now, the chart has still been showing exceeding expected volume the entire time. Looks like it might back off. Dow right there, it's pushing, but we're still exceeding expected volume. I would be really shocked if we don't do it again right here in this bar. I think we're right there at that level, if not there already, exceeding it more. So it's not done. No, it's already exceeded it. Look at that. So right there, you can see this is the volume expectation right there on this hour. On the Dow, expected 723 contracts. We got 1,400 contracts and climbing. So, does look like we're in a little pattern where it should flatten out. That's one of the things I also look at is, where we get like the ups and downs just on the expectations movement. So as I see that up, so I'm expecting that's where we're going to get the big down move, and it drops down, we get the up again. I expect the big up move. Again, this is expectations of volume. So what do I expect to see? What's the pattern that we usually get this time, of day? And notice how, like, right here, like, we expected like these levels, and then we expect to see how the volume drops back. Okay, so I basically expect the market to sort of flatten out a little bit and not start moving until I really start seeing volume increase, which is what you see if you're looking right here on this chart. What you see, the volume, the expected volume. I'm not talking about the actual volume. Just the expected volume's like increasing. That's when I expect that trend. It flattens off. Look at that. And I'm not talking about, again, I'm not talking about actual, the blue arrow. I'm talking about the orange arrow there. Flat, and not really getting much on it. Sort of backs off a little bit, but then all of a sudden it picks back up steam. That's the expectation. Look at that. That's where we start getting that down move again. Picks back up. We start getting that down move again. Picks back up. We get the continued down move. Picks up a little bit. This one we get a little up move on, but I mean, not much going on. We'll see. But so far, not counting it out. I would presume it's done, but I would not trade upon that presumption. So opinions cost you a lot of money, and you got to follow the charts. All right, let's check out. What do we got? What's our picture look like over here on the S&P? And well, that went up. We'll check out the Nasdaq. And we just had some beautiful charts this morning. I mean, there's some great trades. And, across the board here. So even, the DAX, I mean, knocking it out. So all across the board, flying down, flying back up. But looking at the S&P, yes, I mean, we didn't get as much of a clue on the volume breakout. Starts breaking out right there, but stayed in that range during that time. So I guess that doesn't matter. Same thing. We got a couple, but still stayed in the range. But look what happened when it did break out. So right here we have very clear breakouts. I mean, we have multiple breakouts happening. So it starts up like right here at the end of the hour, and then it keeps going. It's breaking out of volume, and we break out of the expected range. So it did that the entire time. Again, right here. I mean, we've been doing it the entire time. There's no reason to not expect that to continue happening until it backs off. So the S&P gave us a really good clue just on the volume there, breaking out of that expected movement to be able to use that to our advantage. And let's see here. So we go in and let's look at the Nasdaq. And we're going into rollover too, but currently in process. And if you ever want to see sort of where we're at on rollover, you can always hop on CME, and we'll just go down here. We'll find the equities. Say, click on, S&P, and there's a chart of it. That's nice. But over here is what I was going for. And let's see the volume at. You can tell we're still in March, but we're rolling over. It's happening. We're rolling over right now to June. And so that's where you can see that rollover starting to happen. It'll be complete when March drops below June. So right here, but we check out the Nasdaq, and it's exceeding. It was exceeding the range right here this morning. We barely broke out, but we also barely exceeded. So like, see, we just barely exceeded right there. We broke out of the expected range. Keeps going. We're out of it. We actually don't break out here till the end, but we do break out. We basically expire right on the expected move at the bottom. And then right here, we're getting expected range breakouts like crazy. Look, we get a massive break below, right down to that one deviation level. Bounces off of it a little bit, but volume does not back off. Volume keeps exceeding expectations. Drops on back down. We get a big move down. And volume drops, so actual volume. So that's what that little blue line is, the actual volume. So volume does decline. So we get a little bit of a pullback right here. We're right at the 1.5 deviation level, but notice it stays above the expectation. So it's saying, hey, we're not done yet, and it's pushing down. So, definitely a point where your top should be, your stops should be tightened. I was about to say your top should be tightened, but anyway, so tighten that up, and watch carefully. Also, of course, we're out at a deviation level. We always like to tighten our stops when we get to those deviation levels. And again, I display those for you each and every day. They're put right in here, right inside the scanner. And I got them on the Nadex markets. I got them on something like 20-something FX markets now. Of course, we got them on the futures markets, and we got them on, futures forex markets, ags markets, indices, metals, so energies, all that, where you can go in and get access to these deviations. Incredibly accurate, very helpful. BSC pushing on down, and that expected volume. All right, so we got expected movements with deviations, we got expected volume, we got expected ranges. More expectations you can got. Remember, that's what is diagnostic trading. What's the heart of diagnostic trading? It's seeing how other traders see the market, okay, and being one step ahead. Looking at the fundamentals, like the news, okay, looking at the statistics, like the expectation of movement, like in a given day. Looking at the seasonality, in this case, we're sort of crossing the line between seasonality and statistics, because we're saying what's the expected movement in this 4-minute period, in this 10-minute period, in this hour period, what's the expected volume during this. So we're breaking it down very specifically. So it's a seasonality by time of day, along with the statistical number on that seasonality, which seasonality is statistics. So it's just to time of day. So we got seasonality, we got statistics, on how far a market will move on any given day and how far it'll move on any given really minute, hour, whatever time frame you want. And then we're going to go into the last piece, which is technicals, which is just look at where it's going. So as you can see, I got a nice, clear, short trend line. Had it for most of the morning. So we were sort of choppy early in the morning. Markets opened on up, and then pop. There we go. So we got our break. I got a breakdown right here, 1020 or so, and moved on down. Got my move. And able to ride that, easily trail that stop all the way, have confidence to stay in the trade, no matter how much that, my case is expected range, it's going to bounce back. It does bounce back a little bit, but I'm getting breakout on volume, so it's probably going to keep pushing down. And then it flattens out a little bit, and it does. But again, then I get breakouts on volume, and I get another confirmation to go short. Keeps breaking out on volume. I can trail it. I can really maximize my profits by combining these pieces together. Let's look at something, oil. Okay, we'll check out oil today and load that up. And, oil's rolling over as well. So we got the same thing going on there. And all the indices. So make sure you do update your charts, at least by tomorrow, close of trading. Okay, to roll on over to the next month. And let's see, so that'll be June for you, and May for oil, and then June for the U.S. indices there. And let's see, what do we got going on? So oil, really choppy, all right? So a lot of chop happening. We're just hovering around settlement. Everything else is moving. Oil is just like boring. It can be great. You can make a lot of money with boring. Sounds funny, but I mean, it's staying in the ranges. So then we're telling you when it's about to break out. It does break out. It flattens off. You go in, you can short again. So there's a lot of possibilities. You can do it on even in chop. Expectations will help you know how far to expect the movement. And then if you have expectations on volume, and you do see that trend, increasing, cool. When it backs off, expect it to back off a little bit. It does. And then we break out a little more volume right there, like right here, before it even happens. Starts going, boom, you grab a little bit more. I mean, that's 20 cents, that's $200, okay, on an oil future. And then it starts moving on down. We're getting some increased volume on the way down, and look at this, drops, and then sort of flattens out. So pretty choppy day compared to everything else you could have been trading. We go over natural gas, not so much the same as oil. And we'll pull that one up. We'll also check out gold. And but just a lot of action in the indices, a lot of action in the currencies today. But we do have some energy movement that we can also take advantage of. And the thing is with natural gas is, we talked about this before on the show. It's expected to move a lot. Okay, 1-2% is normal. But we do get a nice move. And, of course, today we also, being Thursday, we got our inventory day. And so that's one of the other projects I got on my list, is really trying to figure out how to master that inventory report And I think I'm going to end up on the iron condors. Is where I think I'm going to end up on natural gas. So we'll see where that takes me. But I would be really surprised if it doesn't. We basically were right at expectations today, by the way, on natural gas. So their expectation was a drop in the storage of the British thermal units of natural gas of 199 billion, or 199 British thermal units, and we had 195 instead of 199. So just 4 off, not a massive difference right there. And pretty flat. Noticing we're really not exceeding any kind of ranges. I mean, we got a couple of spikes here and there, but a lot of them just right on their normal volume levels. It does pick up a little bit right there, very noticeably. And at that point, we do break right down to it and then pull on back. So, we got a couple of them right there that were really good, but then it backed off really quick, giving you a good reversal trade. So, but just a normal one deviation move, 2%. That's just how the some of those less liquid futures go. Let's check out gold. See where we're at on gold on the day. And sort of start off in the morning. We go through, first thing here we look at where everything's at. And we can see gold, silver, not massive movers. We got oil pretty flat on the day as well, so not a big surprise. Soybeans, big move. We got to check soybeans out. We'll go and look at that one next. Okay. So here on gold, well, we do still doesn't look like we have a massive move, but we still get a pretty good move. Looks like almost up to that one deviation, but not quite a full one deviation move on the day, even with the drop and pullback. And but doing a great job of staying inside of its ranges for the most part until we start getting right around here. You start seeing all this volume picking up. Pretty much everything else was really rocking. And that's when we saw some breaks outside that range. But we had no excuse, plenty of warning, volume way above expectations for that time of day and for this day of the week. And that's the 4 minutes for Thursday. And it'll change next Thursday. I update them every single bar, every single day. And but gave us great warning right there on gold. And also confirmation. If you're long, you're trending, and it's sort of flatlining here, and then all of a sudden it starts pushing up, and you're getting that breakout on volume. That's a good confirmation. It's going to keep going. That's a good way to trade the spreads. That's a good way to help you pick your binaries. And go, hey, no, I'm going to do an out-of-the-money trade here instead of an in-the-money trade. And, what is a realistic target for me? So if I go right here and I see this and it's breaking out, and I'm like, well, hey, I could go for the top of this range. And then I see it still breaking out right at the top of the hour. I could go for the top of that range. And now I want to close out. I want to take my profit. I don't want to depend upon it being there. But I can usually get on a pretty good low-risk trade by doing that. And I want to have time. I don't expect, if it just starts breaking out on volume, that it's going to happen in the next 10 minutes. So I'm probably going to choose, when I do an out-of-the-money trade, I'm going to want time on my side. So I'm probably going to choose out, an hour and I'd say at least 20 minutes, hour and a half minimum till expiration on most of my out-of-the-money trades. I mean, you can choose shorter, but you just better be ready to take profit faster, or it better be a really close out of the money. All right, we'll be back right after this.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, come on back here to the Diagnostic Trading Hour. And so that was gold right there. So let's check out soybeans. And big mover today. We'll load that one on up. And just see how putting the whole diagnostic plan together can help us out. All right. And so 1 second here. And here's our day on soybeans. So market opens on up. Got a little gap there on the market because it's sort of weird how soybeans works. It closes and then it reopens. And anyways, so once that gets going, we got some volumes and things happening back and forth, back and forth. Not really seeing a clear trend with the volume. It's just moving up and down, up and down. But basically saying pretty close inside those expected ranges. We are exceeding them by a little bit, but we're also exceeding volume by a little bit, so that's not really a big surprise. We finally start seeing a little bit of a trend here, like it's lining up, like the trend line. See, that one's like we got short, but it's going up. Here we're actually seeing it go up with the trend. That's good. We're seeing that volume increase, which is good. We see volume increase right there. That's really our big, like, hey, this thing's about ready to go. And it pops up, pulls back down a little bit, levels off for a second. Usually does that, breeze, okay, and then pop. All right, so whereas we would have got out right then, you don't want to get out yet. You don't have anything telling you it's going the other way. It's just chilling out. Also another good potential entry point. pop, flies on up there, and then notice how that volume goes up, and then the volume still stays high, and it even increases again here, but now it starts backing off, and that volume starts backing off. We just see the price start backing off a little bit, and right away we're at a 0.7, we're almost to a 1, and right down here we actually hit the 1 deviation, low to high. We hit that right on that first big pop, and kept going. We're starting to break down past our trend line here, and our volume has went very flat. We're starting to move down on soybeans, and our volume is starting to increase on that downward movement. And so that would give me caution on continuing to stay in along and potentially start looking for a short setup in the process. So the only long I might be in would be like an in the money long on the trade, but with a pretty tight stop, because if it breaks down, it could do one of these things, but to the downside and pop on down really quick. Ag can move fast. So that's a quick wrap up for us on the soybean market. We covered gold. We went and we looked at natural gas. We got a little view of a choppy oil day, but stayed within expected ranges, so that's great. We went through and checked out all the indices and checked out a couple FX pairs. And as a reminder, we do have FOMC coming up next Wednesday, and that's going to be our big trade of the week. That's going to be one of our few big trades of the week. We only had one big trade this week. We had the Aussie Dollar. And reminder, I was talking to some traders last night, a couple of traders who forgot about it. If you see unemployment, if you see, rates coming out on a country, like their non-farm payroll employment change, whatever they call it, for that country, expect movement during that hour. So that's their NFP, their employment rate. So if you see Canada's coming out, or Australia's coming out, or New Zealand's coming out, or Japan's coming out, major countries, Britain's coming out, Germany's coming out, but usually the biggest impact on Europe. Expect some volatility. Now, you may get 60 or 80 pips, you may not, but use caution on those reports. When you see interest rates, use caution. All right, now it may be an iron condor, it may be a straddle, but don't just do your normal thing. Okay, that's fundamentally seeing other traders look at the market being one step ahead, so it doesn't slap you around. All right, I hope you all have a great day. I hope you have a great trading day. I hope it's going well for you. I will see you next week, and I'm out for a 10-year wedding anniversary. You all have a good weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.